The news hit like a thunderclap, sending shockwaves through the automotive world and beyond. For many, it was almost unthinkable. Volkswagen, a name woven into the fabric of American roads and pop culture, was pulling out of the United States. On November 12, 2025, Volkswagen announced its phased withdrawal from the U.S. market, ending over 70 years of history. Dealerships across the country began preparing for closure, and loyal customers were left stunned, wondering what would come next. Once a symbol of post-war optimism and counterculture freedom, Volkswagen's exit marks the close of a major chapter in American automotive culture. The Beetle and the microbus weren't just cars, they were icons, representing a spirit of adventure and individuality that resonated for generations. The company's press release outlined a 2-year wind-down, a dramatic pivot away from a market it once courted with billions in investments in a dedicated U.S. plant. Executives spoke of strategic realignment, but the sense of loss was unmistakable. Despite its deep roots, VW's market share remained low, squeezed by Korean value brands and German luxury rivals. The competition was relentless, and Volkswagen struggled to find its footing in a rapidly changing landscape. Efforts to reinvent after Dieselgate fell short. The scandal's shadow lingered, eroding trust and making it difficult for the brand to regain its former glory, even as it tried to pivot toward electric vehicles and sustainability. The dream of dominating America is now abandoned, leaving a void for competitors and a legacy tinged with disappointment. For many, it's the end of an era, one that shaped not just the car market but American culture itself. This isn't a niche player leaving quietly, it's a foundational brand severing ties with its third-largest market. The absence of Volkswagen on American highways will be felt for years to come. The move raises tough questions. If Volkswagen can't make it in America, who can? Industry experts are left debating what this means for the future of global car makers in the U.S. The answer lies in a mix of declining sales, tough regulations, and a miscalculation in the electric vehicle race. Volkswagen's ambitious plans for electrification failed to capture the American imagination, and stricter emission standards only added to the pressure. As the dust settles, the industry faces a stark new reality. The departure of Volkswagen is a wake-up call, signaling that even the most storied brands are not immune to the shifting tides of the American market. The most immediate impact falls on thousands of American workers whose livelihoods are suddenly thrown into uncertainty. For many, the news came as a shock, upending years of stability and hard work. Nowhere is this felt more acutely than at the Chattanooga, Tennessee assembly plant, a cornerstone of the local economy and a source of pride for the region. Opened in 2011, the plant symbolized Volkswagen's long-term commitment to the U.S. market, providing thousands of jobs and supporting countless families. But now, its future, and that of its dedicated employees, hangs in the balance, clouded by uncertainty and fear. The closure will devastate not only the plant workers, but also local suppliers, small businesses, and the wider Chattanooga community, all of whom depend on Volkswagen's presence for their own survival. Across the country, 650 Volkswagen dealerships, many of them family-owned for generations, now face the threat of extinction, with owners and employees alike fearing for their futures. Volkswagen's promise of transitional support offers little comfort as the looming specter of financial ruin and mass layoffs overshadows any assurances. On Wall Street, the fallout is immediate. Volkswagen's stock plummeted, erasing billions in value overnight and sending shockwaves through the global auto industry, signaling deep investor skepticism about the company's future. The billions invested in U.S. operations are now written off as a colossal loss, leaving behind empty factories and broken promises. Communities like Chattanooga lose not just jobs, but also a sense of civic pride, hope for the future, and the economic stability that once defined their daily lives. The human cost is measured in lost paychecks, mounting bills, and the unraveling of community life as families struggle to adapt to a new reality. Volkswagen's retreat leaves a lasting scar, a painful reminder of the profound human consequences that can result from global business decisions made far from the communities they affect. For millions of American VW owners, the company's exit brings anxiety and practical headaches. The sudden departure has left many feeling stranded, unsure of where to turn for reliable service and support. Volkswagen promises to honor warranties and provide parts during the transition, but the logistics of this promise remain unclear. How will they manage to keep up with the demand for parts and service from overseas? Owners worry about plummeting resale values and future support. The uncertainty surrounding the brand's exit has already started to affect the market, with potential buyers hesitant to invest in a car with an uncertain future. As dealerships close, finding qualified service will become harder and more expensive, especially for complex models. The specialized knowledge required to service these vehicles may become scarce, driving up costs and wait times. Independent shops may lack the tools and training for modern VWs, leading to longer waits and higher costs. This could force owners to seek out more expensive, specialized service centers, if they can find them at all. Warranty claims could become bureaucratic nightmares as VW's US presence shrinks. The process of getting claims approved and serviced might become more cumbersome and time-consuming. The trust built over decades is broken, leaving recent buyers feeling abandoned. Many who invested in the brand for its reliability and reputation now feel betrayed. For electric VW owners, the situation is even more precarious. Software updates, battery servicing, and charging infrastructure are all in question. The advanced technology in these vehicles requires specialized support that may no longer be readily available. Without direct support, these advanced vehicles risk becoming obsolete. Owners of electric VWs face the daunting prospect of their cars becoming unusable without the necessary updates and maintenance. VW's exit is a stark warning for those who put their faith in the brand's electric future. The departure leaves a void that will be hard to fill, casting a shadow over the future of electric mobility for VW owners. Volkswagen's US exit is the result of years of declining sales and a failure to capture meaningful market share. Despite billions spent on Americanized models, VW was squeezed between affordable Korean brands and premium German rivals, stuck in a financial dead end. The aftermath of Dieselgate brought massive fines, shattered trust, and mounting compliance costs. Tightening US emission standards made it unprofitable to engineer cars for a shrinking customer base. VW's electric push, led by the ID.4, failed to dent Tesla's dominance or match the momentum of Ford and GM. Ultimately, the company's leadership saw diminishing returns and chose to cut losses, redirecting resources to higher growth markets like China and Europe. The American dream had become a financial nightmare. Walking away was the only logical move. Volkswagen's departure is more than a business story. It's the end of a cultural love affair. The Beetle, arriving in 1949, became a symbol of post-war pragmatism and rebellion. The VW bus defined the counterculture movement, a rolling icon of freedom and adventure. Through the decades, models like the Golf and Jetta became staples of American life, creating memories and brand loyalty. VW cars were more than transportation. They were woven into the fabric of American experience. The loss is emotional, a familiar presence gone after 70 years. The Beetle, bus, and GTI are now cultural artifacts of a bygone era. Volkswagen's exit is like saying goodbye to an old friend, leaving a void no other brand can fill. Volkswagen's retreat is a watershed moment, warning that no legacy automaker is safe from today's pressures. Analyst Rebecca Vance calls it a canary in the coal mine, signaling that the costly EV transition may force more exits. The era of the global car is ending. Automakers will now focus on core markets and abandon weaker ones. Competitors like Toyota, Honda, and the American Big Three are poised to capture VW's lost market share. The void will intensify competition, especially in SUVs and crossovers. For Germany, VW's failure in America is a national embarrassment, raising doubts about its industrial might. The shockwaves extend to European suppliers, threatening jobs far beyond US borders. This event signals a fragmented future, distinct regional markets, not a single global one. With America in the rear view, Volkswagen is betting everything on China and next-gen technology. China, the world's largest auto market and EV leader, is now VW's main focus. Billions are being poured into R&D centers to create cars tailored for Chinese consumers, emphasizing connectivity and digital features. But competition is fierce. Local brands like BYD and NIO are innovating rapidly, and VW is now the legacy player trying to catch up. Success in China is far from guaranteed, and failure there could be existential. Beyond China, VW aims to lead in software, batteries, and autonomous driving, using freed-up capital from its US exit. The battleground has shifted from engines to digital platforms. VW's bold move is a high-stakes gamble for survival. Volkswagen's US exit closes an era and signals a new, uncertain world order. Its legacy is mixed cultural icons like the Beetle and bus, but also business failure and surrender to market forces. The event shatters the illusion of invincibility for global automakers, serving as a cautionary tale for others. The pressure to innovate or retreat has never been greater. For America, VW's exit is a moment of reflection and a chance for domestic brands to rise. The company is trading its American past for a Chinese future, mirroring the shift in global economic power. The future of the automobile is being written in Silicon Valley and Shanghai, not Detroit or Wolfsburg. As VW fades from American roads, it leaves nostalgia, disruption, and a warning: even giants can be left behind.